the kind of infrastructure boost that this country is getting, what you always call it the last mile connectivity, that your soft drink is, or your juice in particular, is able to reach that village. This drink going there, it's also becoming aspirational.
If you look at the sugar content of a Coke, it is around 10.2 grams in 100 ml. If you go to fruity, because I mentioned in the first, fruity, that is considered mango and fruit healthy, compared to a Coke, has 50% more sugar.
Initially, we had to pay people to take away our waste.
Okay.
Then people just transported it free of charge. Then a time came where they started paying us for the waste.
Hi everyone, today we are with Foods Inns in Mumbai. Today we are interviewing Mr. Milan Dalal, and he will talk to us about how the company during the last 50 years progressed into different verticals. They are one of the prime suppliers for fruit pulp. Specifically, they're into mango pulping. Around 80% of their revenues comes from mango pulps. So if you're drinking a fruity or a Maaza or Minute Maid, any juice, and there is a mango juice, there's a good probability, I would say 1 by 5 or 1 by 6, the promoter would tell us better, that the fruit pulp is coming from Foods Inns. So thank you very much, sir, for enabling us to conduct this interview.
Great.
I would like to ask you to talk about your education, your entire timeline, where you studied from, how you progressed, and then how you maybe you started a couple of ventures, you started working, and then you came into this business, which is second generation business, I suppose?
Yes.
Yes.
So to start with, I am a graduate from the Mumbai University, and I've started very young in business. As a start off, it was in multiple businesses. I'm actually a third generation stockbroker.
Okay.
My father, grandfather, all were in the similar business, but all these expansions and diversifications were done under my father, who is age 82, currently the chairman of Foods Inns. And this journey started about 50 years ago. Of course, I wasn't involved then. And it was a spray drying unit in the city of Mumbai. And it used to do liquid eggs into powders, primarily to be sold to the defense for the high altitude areas.
Okay.
Because you could not move fresh eggs to those difficult locations. As per our preference, that of my father and then of the group, we decided not to continue that business of egg powder manufacturing, and we moved on to other fruit pulps, be it mango, banana, any and every fruit or vegetable liquid can be converted into powders. It becomes as a kind of an ingredient manufacturing. Typically a tomato powder would be used for chips and wafers like Lay's or any other what's available into the market. Certain fruit pulps also get into supplements and or brands like Cerelac and others where the flavoring happens. Come around mid-80s, where by accident my father was on its trip to Gujarat and was looking out for some manufacturing unit, and a broker suggested that there is a Coca-Cola India plant which is available, and the then government, the Janata Dal government, had thrown out all the foreign companies out of this country, and Coca-Cola was one.
Okay.
And which was primarily into canning of mango pulp.
Okay.
So to be frank enough, it was by accident that we got into mango pulp, and we bought that plant in mid-80s. Needless to mention, that plant still runs in Valsad. Obviously, there would be continuous makeovers as required. And the journey from there, which started off with a modest 15-20 lakh turnover, to a whooping last year of almost 800 crores in the pulping business.
So just to interject, 1970s around, you must have started the spray dry unit.
Yeah,
which is
late
like
70s is
late
when
70s.
we, yeah.
Okay, that is like egg powder mostly.
Yes.
Any other powders or just egg powder?
Egg powder was where we started off originally, and now we are into multiple other fruit powders, including the latest being honey powder. We can do cheese powder, honey powder. It goes into confectionery. And in fact, the honey powder goes to the Coca-Cola brand called Minute Maid for their apple juice drink, which is there.
Yes. Okay, and then in the 80s, late 80s.
So mid 80s, we got into pulping, and then the journey started. From a simple canning unit, we've gone into the aseptic units. We are now at 7 locations, 2 in Gujarat, 2 in Maharashtra, Nasik, and 3 in Andhra Pradesh down south in Chittor.
Okay, and all these plants do pulping?
Pulping of mango primarily.
Yeah.
But as you would know, that mango is a very seasonal fruit. The manufacturing happens less than 3 to 4 months. So to make the maximum utility of our capital assets, we convert other fruits into pulps, be it guava. We have started getting into a big way now in tomatoes.
Okay.
So these are the other ways, and try and make the maximum utilization of the fixed assets.
Okay. Now you said I would like to come to the verticals, the different verticals that you have, some of the ones that you've recently started and the existing verticals. But just hanging on to the fruit pulping here, it is mentioned that you have 15% share in the global market in the pulping, mango pulping business.
Right. Yeah.
Right. And if you've started in mid 80s, why not double down on that and increase capacity and go into maybe other regions also that has mango, which is different, which follows a different season than India?
So as I just mentioned 2 minutes ago, that this is a highly seasonal product that we have to manufacture in less than 3 to 4 months. Sometimes even it could be less than 2 months. So to set up units, all India itself is a huge country. To set it up around different nooks and corners is not going to be viable. Having said that, between these 2 regions of Gujarat, Maharashtra on the west and Andhra Pradesh in the south, we are covering up almost 75 to 80% of the processing variety.
Okay.
We are definitely missing 20% of the north variety, which would be our next step, try and cover that up as well. Once we have done that, the growing regions of mango within this country, we would have taken 1 more unit in the north and we should have covered all the possible varieties.
Okay. So you're now going into other fruits and vegetables?
That's
like
right.
tomatoes,
Because this
guava.
being it's being agro product, nature plays a big role. Alfonso, as everybody knows, is the king. Alfonso is the fruit in mango, followed by various varieties like Kesar, Totapuri. Some has the flavor, some has the aroma, some does not have any of those. So as a mix and match of multiple varieties available, we would go in for whatever is possible to manufacture in India.
Is this Alfonso named after a king of Portuguese or something?
As the legend goes, it is the first sapling was imported. Somehow the soil and the water in the Konkan region, the Ratnagiri region, the Devgarh, it suited the best, and it's a GI tagged fruit, and it remains to have that as an importance.
No, I get your point. So one is the pulping business, and mostly you're into mango, and which is very seasonal. And secondly, now you're going into other verticals as well. So one is your the spices, own branded spices, Kusum, and frozen foods also you're going into. You had PLI, which is very interesting. You got it for Tetra, Recart. Okay, I want to understand, are you just making, so can you just explain these verticals? Then I'll come back to the question.
Sure. So we covered a lot already on the pulping division. as a logical kind of an extension, because our plants are in the vegetable growing areas of Gujarat and Maharashtra, which is around Nasik and Valsad, and that we had a lot of customers and we get a lot of inquiries where we could do frozen vegetables for exports. We willingly went into the Indian ethnic food like samosas, parathas, naan, which is now catching up with the Western world, where the samosas and naans have become quite common, not necessarily only for the Indian community. And with that as in success, we replicated that ideas in both the states, and we have got large order book positions, and again it's seasonal, so it becomes a bit of an issue, but being frozen you are able to do it around the year, the production, and feed the world markets. From frozen, we got an opportunity as a different, these were all our B2B verticals. We have, I would say, majority of our clients are Fortune 500 companies around the world. In India also, to name a few, it's Coca-Cola, Pepsi-Cola, Unilever's, Nestle, Dabur. These are some of our customers. You did mention about our mango drink being in multiple fruit juices in India. Just slight correction, we don't currently sell to Fruity, but we are the number one supplier for Coca-Cola, their brand Maaza. It's $1 billion brand in India. And of course Pepsi, who under the brand name Slice they operate, and we do supply to them.
To Slice as well?
Yeah, to Slice.
So Slice, Maaza and Fruity are the biggest mango,
the three in India which is there. Maaza is also internationally, they have in some segments.
Correct.
So we would sell it. There would be multiple other brands that Coke and Pepsi would have it around the world. So including Middle East, Russia, Ukraine, other European countries. So we would go, but nonetheless, India is a very, very large consumer base for them. And the non-cola, non-fizzy drinks and the juices. So as I was mentioning that we were into a B2B segment, and we did feel that we need to get a flavor of a B2C brand, and whereby our margins are better and we are able to go directly to a consumer. So in 2019, which is quite recent, we bought a running profitable spice brand called Kusum Spices. Very much Mumbai-based West Zone brand. Unfortunately, because of COVID, we didn't, of course, lose money or lose our sales, but the expansion plans got deferred by 2 years. We are now seeing that growth likely to happen, and we would ultimately grow the geography for our spice brand. Somewhere around the time, around 2019-20, when we did the spice brand, we got an opportunity of this technology called Tetra Recart. Tetra is a famous international company, and they are known for their packaging of juices, milks, primarily liquid kind of thing. They came up with the next gen technology whereby you could pack ready to eat foods, soups with a long shelf life, and easy to use packs, which is there. And needless to mention that also eco-friendly. Substantial part of it, 72 to 80% of that is biodegradable.
It's made from trees, right? They say.
Yes, different percent. So we had originally thought of a lease model. We are currently exclusive with them, and it's an gentleman's agreement that we would have the right of first refusal, and for the next couple of years they would not come up with another kind of a unit of the same type. And we have set that up in Gujarat. Simultaneously to this, as a very interesting question you asked about the government's scheme of PLI, the Production Linked Incentive Scheme. And under our ministry, the Ministry of Food Processing Industry, in a particular segment, which is the fruits and vegetables, we were eligible to apply for the same. We went on to our drawing board, did it. It required a minimum capex of about 70 crores. We committed 78 crores.
Okay.
And we have crossed that limit. Having said that, what the ministry and the government wanted was a minimum 10% CAGR growth.
In sales or?
In sales on the top line. And a maximum of 15% for that particular year could be eligible.
Okay.
Which means if you've grown over 15%, the cap is on 15.
Got it.
For some reason you are under 10%, you don't get any incentive for that year. But there was a carry forward possible, and it was a 6-year period by which you could complete. They wanted to make Indian companies champion and be competitive in the world market. And nonetheless, we qualified, and almost as per our calculation, approximately 148 crores is what we would get as incentives in the next 6 years.
Okay, so you said 78 crores. Is this the upfront capex? Then
That's
year
right.
0, year 1? If that's the case, then what is like the 5-year capex that you have to do cumulatively?
No, so there was a particular cutoff date of 31st March 2023.
Okay.
Having said that, many, because of the pre-COVID issues and others, the industry as a whole requested for an extension, and the extension was until 31st March 2024. So this would be no more under this scheme. Whoever have not completed the capex as of 31st March 2024 will not be eligible to that amount. Obviously, the threshold having already been surpassed, but that calculation would happen as of the end of this financial year. And very happy to say that Foods Inns has been able to achieve. We have not only crossed the committed thing, we have in fact exceeded, because simultaneously to the PLI, we committed for a tomato processing expansion, and we have implemented that as well.
Okay. So on the PLI, just to hold on to the PLI for a minute, you've committed 78 crore capex that you've done is for Tetra Recart?
Multiple. It's for Tetra Recart, aseptic.
Okay.
So expansion of our existing mango processing line, the tomato line, the frozen food line. So everything.
What
included.
is aseptic?
So aseptic is a process.
Okay.
As one would wonder that this being a natural fruit, it's a perishable commodity. So if you don't process it, rather at home, if you don't eat it in 2 to 3 days, it will rot. In processing, it may be 7 days. But how do you consume over and above? So this is a process where the pulp is taken to a very high temperature. It's similar to a pasteurizing process, the way milk is preserved. This is where this happens, and ultimately it has to be packed in an airtight kind of a situation, and it's all machine handled process, and that would give you a shelf life of about 2 years for ultimate consumption by the manufacturer of juices or whatever your end users are.
Got it. So the 78 crore capex is for the verticals that you just mentioned, and you've put the 78 crore capex, you've deployed it. Now you need to grow your sales. I think it's financial year 19 is taken as the base year, if I'm not wrong.
If I'm not, 1920 was the base year, and it started from 2021.
Okay. So from 2021 onwards, you're supposed to grow at 10% CAGR. Then you would be eligible for incentive of up to?
In our calculation, based on it, is approximately coming as 148 crores.
148 crores. And have you received anything as of yet?
Yeah, we've already received the first year of 9.71 crores, which is there. And we are expecting soon for this year another approximately 15 to 17 crores, waiting for the government to make the final assessment, and subsequently at an average of 18 to 20 crores each year.
18 to 20 crores each year. Wonderful. And if I may, where does this amount go on the P&L?
It can, yes, straight. It can come into the P&L above the line. It can
as revenue, other
as
income.
revenue, yeah, as income straight.
Okay. And now coming into the other Tetra Recart, I'm still a bit confused because is it basically Tetra Pak, right? Or is it that the branded products that you have, you'll be packaging this into a Tetra Recart?
So Tetra Recart is again, it's a technology.
Okay.
In a Tetra Pak, as you would get milk under Amul, you would get it under Gokul, you would get it under multiple other brands. Similarly, this technology of packaging is exclusively with us currently.
In India? Or?
In India.
Okay.
It's about 12 in the world. This is the 13th around the world. In India, it's the first. We have decided to launch just to have the proof of pudding under our brand name Green Top. Okay. But we have got very large capacities and we would be soon, we have approached multiple companies and a lot of trials are happening. And we would be co-packers for many other multinationals within the country and internationally. It could also have ready-to-eat tomato-based sauces, be it pizza sauce, be it pasta sauce, soups, curries, dals. So that's the kind of possibility. So we have launched our own products in as a test market mode, and subsequently we should be now ready. We would have 1 full years of operation, whereby we would have multinationals, we would be doing job work for them.
Okay. So like an OEM, you would be giving them, and they would be branding it under their name and selling it at a higher margin because of their reach, distribution, visibility, etc. Got it. Now I want to come to the most interesting part that I found about in the business. The mango, when you do the pulping, there is a lot of wastage. Even when we consume mango, there is a lot of wastage. The skin of the mango. So you have done a new project which is called Pectin, and the name of the company is Beyond Mango, where you are a 49% holder, 50% holder?
50%.
50% holder. Okay. Wherein you have done a capacity expansion of around, what is the amount of capacity you have done?
So basically, just to answer your question first, that we approximately process 300,000 tons of mango per annum.
Okay.
And 50% of that is waste in the form of skin and waste in the form of shell, which you call it the seed,
or
in the colloquial word you call it the gutli. So it's one of the 3 words that one could use it. The whole process, initially we had to pay people to take away our waste.
Okay.
Then people just transported it free of charge. Then a time came where they started paying us for the waste. And currently we only use the seeds as briquettes, as fossil fuel, to put it back into our burners. So that's one way of giving it back to the Mother Earth and doing it. But ultimately, the fact that we have now cracked the pectin extraction from the skin.
Yes.
And pectin is none other than a natural form of gelatin, which comes out of the plants. It's a thickening agent. So juice manufacturers, food companies, we are not the ones which are suitable for the pharmaceutical to make capsules, but anything other than that. And because we've just restricted to one zone south, because to carry this waste is also a task. So we have our plant is already set up and commissioned in Chittoor down south, where the maximum numbers of mangoes are processed. And once we see that success, we'll replicate that with another plant in the west zone. And this would be able to take up on the basis of a top line of approximately 15 crores. We have a technology partner there who has given us this technology, and it's an exclusive arrangement for mangoes all around the world. But currently, as India is the largest producer, it's as good as restricting ourselves to India. So that's where we stand on pectin.
Okay, I have a lot of questions from this area. First is this gelatin that you said. I think it has come from cows and pigs, right? Gelatin.
Bones, which is
bones. Okay, yeah. And it is used for like a jelly kind of a stuffy feeling in foods. Like it can be in a jelly, it can be in a candy.
Correct.
Right. So would that be the exact replacement, and would it give the same taste and texture?
Yeah, the texture, yes. This is tasteless. So it's the manufacturer who is the jelly manufacturer or the juice manufacturer would do his own taste profile.
Putting all the sugar.
So putting on the sugar and the flavor or whatever they want to do. But this in particular is like a bonding agent or color thickening agent or giving that same effect of doing it will definitely be possible with pectin. And currently it's an import substitution. India does not manufacture, though there are some companies in a small way are doing it from the apple skin. But this would be the first one.
Apple skin you can produce?
Pectin, which is there. But in a very small scale that's happening. As far as our waste management is concerned, once the skin is taken care, what we are aware as a process that out of the shell, when you crack the shell, the seed as we would say, there is a small fruit, a dry fruit, an almond kind of a thing, which can be further processed and it becomes mango butter. It's a very high priced ingredient. And it's used in cosmetics. It has got lot of capabilities of doing it, and also on high end chocolates and all. But we would take that as in stage 2, which would be there. There are different names for that, but as a general word, it's the mango butter.
No, I get it. So you're completely stripping off the mango.
Yes.
You take the pulp and the skin is remaining with the shell, and you process that into pectin, and the inside of the shell that you get. What is the name of the item? You did not.
It's like an almond.
But there's no name associated with it yet.
That's it.
Okay, and that is used in cosmetics, maybe chemicals and things like that. Wow. Okay, and now so pectin. What I read is that it's a 300 crore industry in India, and at your maximum capacity, you would be able to do around 15 crore, let's say top line. Okay, and so do you plan to expand? Like, how has been the demand first? Because you can you can put the capacity, you can talk about the total addressable market, but how is the demand from clients?
So currently, as very few number of clients who are already existing users, and it's an import substitution. We have matched the specification of majority of the projected customers, and we would soon be into a fully sold out position of the capacity that we have. And then obviously subsequently, once we have had everything in place and having worked well for the first 6 months, we would be ready to replicate that into multiple other. This is what we're seeing is only our production, and there were other manufacturers in this country, and nothing stops us from approaching them and taking care of their waste management as well.
This is an unorganized market?
Highly unorganized. No, pectin is there is no manufacturing in India. It's all imported, doing it. So it's an import substitution. Waste management is an unorganized sector, and so we would have a transition of that into an.
What's interesting that you said is, I did not ask you, but you mentioned it, which is very interesting. The factory that you currently have, which is processing the fruit pulp, you would be attaching the pectin unit as well, and then the raw material for this plant would be the waste material of the main plant.
Correct.
And then you would like to, if I'm not wrong, correct me if I'm wrong, you would like to replicate the same in the other 5 factories that you have throughout India. Is that right?
Yeah. Other zones which are there. So Chittoor, I have 3 plants all around. So one of this will take care.
Okay.
Maharashtra and Gujarat units are not very far away, so have a central point. So one more to start with should take care, and then build up further capacities from within these factories, because this is the region, mango processing region. So once I've taken care of these 2 regions, not only my own production, the waste of other manufacturers also would be available.
Okay. And somewhere in an answer, you mentioned that you process up to 300,000 tons, metric tons, if I'm not wrong.
Metric tons of mango.
And out of that, 150,000 metric ton is waste.
Right.
That is now used to produce pectin. Okay. In this 300,000, does it include the lease spaces that you have? Because when I was going through, I was researching, you said that you also use the lease space. Is it including that or excluding that?
Yeah. So the company on the whole does that. So it's including the lease facilities which we have. But as we are, the source is known to us that where are these companies manufacturing first. So arranging to get their waste is would be without any issues and without any hesitation.
Okay. So essentially, if 150,000 metric ton is the waste, you would be looking at a capacity in the long term, let's say, not giving any extreme figures, more than 150,000, because you want to collect from the other manufacturers as well.
Correct.
Okay, got it. So that's so how much are the margins? Because this is waste. Your main cost of goods sold or the raw material is the waste of the bigger plant. Right. So what would be your margins if you can?
So based on the processing and based on doing it, it's a very high Ebitda margin process which is there. So we are aiming on the north of 35% to, in this particular segment of pectin.
Okay. Now you said it is an import substitution, but where do we currently import it from? Please don't say China.
It is.
It is China. Okay.
So that's one of the geopolitical issues also being taken care into doing it.
So who's the largest producer of mango? You said India, right? India is the largest producer of mango. Like what percentage on approx would be India's production?
So there is a very different way of looking at it. Mango is a generic, everybody knows, but there are other regions which when there's South America, Brazil, then there you'll get Thailand, but they are very different varieties of mangoes. In today's day and age, there are a lot of hybrid kind of manufacturing that happens. Very recently, one has heard about in Africa called Malawi, and they manufacture, rather they produce mangoes up there as well. So these are all the other regions. There is some bit of mangoes available in Pakistan as well, but there is not processing units of what we know. So it's more for local consumption and table variety types of doing it. I would easily say that almost 65 to 70% is manufactured out of India.
There are, I think there are more than 1,000 varieties of mango, if I'm not wrong. We'll get the exact number on the screen when we edit it. And even if I ask you how many varieties of rice are there in the world, you won't be able to guess. We only know basmati and a couple of other, but there are more than 1,000, even that goes in 50,000 plus varieties of rice in the world. We'll get the exact figure. So that's a very interesting item. I just want to ask you, in this, you said South America, Latin area. Is the season completely different, the mango season?
Not all the places, but yes, in some geographical zones, they are different, which is there. But if at all you're thinking of importing this to process up here, it's a no-go because the transportation of, it's a few hundred kilometers up here. It doesn't work out if it's far away for two reasons: the cost and that it's a perishable commodity. So bringing it for processing at such distances,
not feasible.
It's not feasible at all.
As a fruit, I love mango the most. That's why it's circulating around this area. Now coming to Coca-Cola. They have announced that they're seeing India and South Korea, Australia as one of the fastest growing markets. Okay, US is already maturing. Everyone has Coke. Okay, but India, the penetration is still very low. If I tell you the percentage of revenue that out of the entire Coca-Cola comes from India, it is absolutely astounding. It's exceptionally low. Meaning, if you ask anyone, they would say maybe 10% because you see it in all Kirana stores, all small stores. But in Coca-Cola India, just putting some facts here, they do 12,800 crores revenue, which is $1.5 billion. And Coca-Cola as a company last year did $45.8 billion in revenue. So if you do the math, it comes around 3.3%, 3.5% of entire Coca-Cola sales. And that is astounding. It is this. I think it's the same for PepsiCo as well. India's contribution to the revenue. So as the country develops, even though it's not health-wise, it's not very beneficial, but the sales of Coca-Cola, sugary drinks, carbonated drinks increases. So does fruit drinks, processed fruit drinks. So Coca-Cola is coming with a huge capex in India. It's a focus area is India. How would you benefit?
So, as you rightly mentioned, that you gave in the statistics of Coke, Pepsi, and around the world, and compared that with India. At the same time, one distinction has to be drawn between the sugary drinks,
Okay.
Or the fizzy cola drinks, and the natural fruit juices. For a minute, I'm not suggesting that the natural fruit juices do not have any added sugar. But three things happening in India in particular. One, it's happening around the world as well, which you call it the sugar tax, or somebody would call it the sin tax, or whatever. That the government of India has given a particular that if the fruit content is of a higher amount, the GST payable is less. So they're encouraging more of the natural products to, more of the natural content to be as part of the juice. So that's one aspect, which is generally not necessarily only for Coke, but the industry in a way. B, the consumption story in India is quite huge. People always talked about our population, we talked about our geographies. But I am witnessing, I'm part of it, we all are witnessing the kind of infrastructure boost that this country is getting. What you always call it the last mile connectivity. That your soft drink is, or your juice in particular, is able to reach that village interior, B, because I don't know the 100% statistic, I would easily be happy to say 100%, but 99% of the Indian villages are electrification has reached.
99, absolutely.
Yeah.
Correct.
So, which means that there is a refrigerator there, or a cooler there.
Yes.
And that this drink going there, it's also becoming aspirational. True. That someone who has not touched a Maaza, and also very different, that's consumer based, and I'm not getting into that part of it, but it has remained as a particular 10 rupee drink which is there. And if someone is able to procure that in that village, and the numbers per capita are so low compared to around the world.
Yeah.
I would say this industry and India has a long way to go and a lot of growth prospects.
Absolutely. So previous to this, we were talking to a company that is into infrastructure, and they were talking about the incumbent government. What they have planned or are executing on is, first they connect every village, every city with infrastructure. Then comes electrification. Then comes water. These three are very basic needs of India. Before you become aspirational, you need these three. Okay. So if you see infrastructure, it's nearly 100%. Even if you take small roads, 95-100%. Electrification, like you rightly pointed out, 99% excellent statistics. And water, Jal Jeevan Mission, if you know, right? And that is around 75% households it reaches all across India. And then once these goals are met, they go into aspiration, like you rightly said. Before it was like Parle G product. Right. Now it can be a Coke or a Maaza or a fruit drink. Yeah. Absolutely. But I wanted to point out something. If you go to any big basket or Swiggy or anything, if you look at the sugar content of a Coke, it is around 10.2 grams in 100 ml. If you go to Fruity, because I mentioned in the first opening as well, it is around 15.6 grams. So isn't it a kind of controversial that Fruity, that is considered mango and fruit healthy, compared to a Coke, has 50% more sugar? But again, that you said that I didn't know about this sugar tax thing that they're trying to cut.
You're doing it, and also there are already natural sugars in it.
Yeah.
And then there is, for the taste profile, the added sugar. As far as we are concerned, we just give it manufactured as is where is. The water, flavor, sugar is all put in by the juice manufacturers.
Absolutely.
So these will be both factors that would be, balancing on them.
100%.
And the more the pulp content, whereby, it's more of a natural thing, the companies benefit as well.
So I compared, like I was in a market, I compared slice, fruity and maza. Okay. And the pulp ranges from 12% to 18%, the fruit pulp. Rest, is water and the other ingredients. And that is very interesting item that you bought about. Now I want to come onto so what about the spices business and the frozen food? Do you expect better margins there, right? Because it's a B2C, like you earlier said. So what have you done in these last, let's say 3 years, 2 years that you have after launching the product to enhance the market share? It is even mentioned that you're going into the UAE region where it's flooded with Indian product. Is there stiff competition there?
Well, there is competition, but a particular market for us that is very, very peculiar to our brand Kusum spices, that we are very much known in Oman in a very big way.
Okay.
Because it was already a kind of a done deal. So people in Oman, prefer Kusum spices, whatever historical reasons. So there are different ways of looking at it in spices. What's the differentiating factor? There are certain common masalas. Everybody does it. Forgetting the CTC, as you call it, the chili, turmeric, cumin part of it. But then the specialized masalas. Every zone in India has its own kind of a mix. Call it the Pav Bhaji mix of a West is different than the North. So we keep doing our R&D, we keep perfecting that part of it. Currently for the Western zone, we are well equipped to doing it. We are doing our R&D for the Southern zone and subsequently for the Northern zone. With that aspect, and when our range gets further expanded, we would be in a position to be in the league with the top companies. We are nowhere near any of the top brands, but we are aspiring to reach at a decent level. Not only domestically, internationally as well.
Internationally, great. Now, making a brand internationally helps the domestic brand as well. And Oman, there's a lot of spice consumers, Indians in general. But that's very interesting. And so I think, look, mango pulping is your primary business. Okay, it's your cash flow king. And then you are looking at other verticals to expand, to increase margins. And most of them is into B2C, technological collaboration, waste, utilizing waste utilization to improve margins further. That is excellent. Now I want to come a bit into the financials. Okay, how has been your debt is high? Do you plan to further increase it because you're doing a lot of initiatives, new areas, or do you plan to further liquidate equity?
So coming back to the first question of doing it, what is my business, and willy-nilly we got into mango processing, and as I had mentioned, we are a 3 to 4 month processing industry. We have to manufacture our year's projected sales within that 3 months, and that's taking away a lot of our working capital. Our concentration is happening for that part. Some of our contracts with the B2B companies, the big multinationals, that's the way the industry has been working and doing it, whereby our contracts go in for the call-offs between anywhere between 15 months to 18 months.
Can you define call-offs?
Call-offs in the sense that, say, example, Coca-Cola gives us an order of an X tonnage. That's for that year, that season. But they would say that we would ask you to dispatch in the month of April so much, May so much, June so much.
Okay.
But it overlaps the next season as well, because they have to be well prepared well in time. By the time it goes from our warehouses to their bottling plants and ultimately to the consumers, they have a lead time, and that's why that extra 3 to 4 months. Having said that, all these big companies with these contracts, they give you the carrying costs, so kind of interest is on them. They give you the warehousing costs, so it does not hurt doing that business. At the same time, there is a very logical question of what came in your mind, that why is the debt so high? So debt in the form of working capital is very high. Debt otherwise has been taken, which was high, but we went in for a capital raise, a warrants issue, and that warrants 30% was subscribed, and further 70% is due by June, and we would totally a 210 crore infusion, of which almost about 125 crores is yet to come in, which should take care of most of our requirements. And then the other banking channels and doing it. Nonetheless, we are also talking to the industry and finding some midpoint to make things win-win for all of us.
Excellent. This stock warrants that you did, after considering the dilution, like you said in June, the entire warrants would be converted. Your equity capital, share capital, if I'm not wrong, so outstanding shares is 5 crore shares, 1 rupee each. Now after conversion, 5 crore would increase to?
7 crores 20 lakhs approximately.
7 crore 20 lakhs.
Approximately 30% from the new capital is the total dilution that we would get into as promoters, and everybody gets diluted to that extent.
Then promoter holding would come down to?
So currently there were two aspects of it. Historically, we were two groups as promoters, starting off 50 years ago when my father started off in another family. The gentleman who was running this company until 2016, Mr. Utsadupelia, he passed away due to his health reasons and doing it. And since then, his family decided to part ways, and now they are decategorized as promoters. So there are two ways of looking at it: as a chunk, which was a particular, and now they are off as a promoter. And subsequently to that, with this dilution, things would be, but corrective actions are being taken within the four corners of the law, and we would be in some way coming at an announcement to put up a balance of our promoter holding, which is an acceptable at least over 25%.
Over 25%. After the dilution, you would come with a plan to increase it to 25% plus. Okay, got it. Now I want to switch slightly from the financials, because what you said earlier, it's quite interesting. You said the cycles overlap, and even you had mentioned somewhere in a report that it can be a 15-month long period. Now, I think you had explained this in the first couple of questions as well, but then I want to connect it to this question specifically. A mango which is reaped today, how does it sustain for 15 months?
So mango on its own can't sustain for that period. It's only when it's processed. And then somewhere you asked about the question of the aseptic. So that's the process. Yes. The other process could be the frozen technology. So there is not a large demand for the frozen compared to the process in aseptic. So we would hold capacities, for our client specific needs under the frozen category as well. And with these processes that happen, the shelf life increases to up to 2 years.
Up to 2 years?
Yeah.
Okay. And Coca-Cola, like for example, a client will call it in the next 15 months after the initial order is given. And you said that they place the order. You've done the processing for them. It's kept in inventory. You are incurring a lot of cost, warehousing cost, air conditioning, freezing, etc., that cost. And you're saying that Coca-Cola, or the client would pay for this warehousing as well in full, right? It's because it's part of the contract. Okay. And the debt that you have, 1.19 times the equity that is the debt at current market price. So you're saying that that debt was raised for this working capital purposes, and once the stock is sold to the client,
Correct.
once they pay back, you would be able to dilute the debt, meaning settle the debt. And
that's right. So you have calculated the debt on one side, but there is enough stock to cover that.
Got it.
And it's more for that short term working capital where it looks to be, the numbers look to be quite high.
No, our thesis is that we don't invest in companies that has high debt, and but at the same time, if a company has an agenda or has a plan to reduce the debt, then we are interested. Meaning, like our lens is like that. Okay, great. And any other area? So these are the areas that you're going into. So the next 5 years, I'm assuming you will be doubling down on efforts in these areas to grow this business.
Yes.
But keeping the mango pulp as the primary.
So it's easier said than done. One would love to say that it's impossible to degrow mango. We've already taken a conscious decision that no more investments in mango, but the mango demand is not reducing.
Yeah.
But our efforts to increase the other businesses has to match, whereby we are at a level of mango and the other businesses at 50-50, which would be one of our finest levels of, and obviously reducing our working capital cycles, reducing all that. So we now have a team which is dedicated, infused to achieve these targets.
Got it. Last question. It's a financial related. Last 2 years, you grew your sales by 50-60% kind of compounded. But then last 10 years, if you take, it has grown by 15% kind of CAGR. So you take the GDP growth of 7% plus add inflation of 5%. So around like 12%. So net is only 3% you're doing extra. So why is that? Why is there such a big difference between a 10-year CAGR and like a 2-year CAGR in growth?
Again, I as an MD, I've just taken over 2 years ago. So let me, on the joke level, take the benefit of your question, saying that I made the difference.
Okay.
But it's not about I. Let me be frank. It's always the teamwork, the efforts. So we have a lot of, even in our team, people who had an average age working experience of about 20 years, but we have a lot youngsters who have kind of joined qualified, who have been recruited over the last 2-3 years, as a combination of the experience and the old and the young and that we decided to get into multiple segments, made our efficiencies very clear, using the fixed assets for other businesses over the unused 8 to 9 months. That's helping in getting in the top line. Of course, being a natural producer, if you could have 1 year where your raw material is at a higher cost. But if you see, we have got volume growth, so we are making the best possible utilization of our capacities.
Your same story. We recently interviewed a company. They did a 6x in 2 years sales, just because of improvement in efficiency and utilizing the unutilized, machinery capacity, etc. So that's very great. One question that I had mentioned, like Coca-Cola is setting up. So how exactly are you benefiting? Is PepsiCo is also coming with new capacities, or?
For India, as we know, and again, one source is you start off with either it's the company which is announcing, which is a newspaper thing, or it would be a manufacturer like that of a Tetra line or others, and the amount of order book position. It's like in an airline industry, how many orders the Boeing and the Airbuses get, you would know the industry size growing. No comparison to aviation, but in the juice manufacturing or the beverage. So we are aware of these capacity expansions. The government schemes are very conducive for doing it. And last but not the least, the consumption story. So having said that, the companies, the bottlers are in business. We as the ingredient manufacturers are in business. and particularly mango with the Indian. In fact, it was one of your statements that you love mango and Alfonso. So your preference as a fruit, Indians are generally how it is as a sport. It is cricket. As a fruit, it is mango, and let's be proud of it, and let's be a party in a journey in that process. Let the multinationals come up with more and more of their manufacturing and
no, absolutely.
be part of the
this
India growth story.
Entire sector will pick up, and even if you see India growth, it's much faster than Coca-Cola's global growth. So India is like one of the fastest growing market, like I mentioned earlier. I think they have 16 bottling manufacturing companies that they've partnered with. So, and they're investing in all. I mean, they're licensing with all. Great, sir. It was a lovely interview discussion with you. Learned a lot about the industry and the company.
Thank you so much.
Thank you, sir.
Likewise, it was wonderful speaking to you.
Right.
Thank you.
So just to understand about the financials, we have with the CFO, Mr. Anand Krishnan. So look, first question I want to ask you. Equity dilution is a big problem for investors, okay? And you're going from 5 crore shares to 7.21 crore shares because you issued a stock warrant to a couple of investors in December 22nd, 2022, December 17th, 2022, right. Somewhere around that date. And my question is, besides equity dilution, your share price was trading at 125, but 125 126, but then your warrant issue came in at 95, which is like a 28% kind of a discount. Why is that?
I don't think the price at that point of time was at around 125 or 128. Maybe it was slightly lower, but the issue price was actually based on the SEBI formula for pricing as such. So it was not less, it was not high, it was at the SEBI floor price as such. And we were at a scenario as a company wherein we were seeing a lot of growth that we were actually foreseeing in front of us, and we wanted us to be supported by able-minded investors, and the SEBI pricing is what we actually followed for the issue of the warrants as such.
Based on the average, I think.
Absolutely, yeah. 90-day average or the 10-day average, whatever is higher. So that's the formula that is followed as such.
The Milan Dalal, he had mentioned how much of it is already converted.
Right.
But how much money would be coming in by June, if you can put a figure to it?
Approximately 120 odd crores as such.
What would be that used for?
So majorly it was actually raised for the working capital purposes. So we have already put up the Capex that we wanted to. So major money that comes in would be for the working capital growth that would actually be using for as such.
Okay. So working capital comes from now debt as well that you had raised, and debt to equity is high. And plus what you had issued through stock warrants that is going to be used for working capital purposes, specifically inventory.
Yes.
Okay.
So as the business grows, basically you would need to actually add up a lot of inventory.
True.
So that you can actually grow your sales, and we are actually diversifying our business so that we don't concentrate only on the mango part of the business, right? So we're trying to build up inventories in all the other fruits and vegetables that we actually pulp.
Okay.
Our objective is to become the largest fruit and vegetable processor in the country as such. So that's where we're heading to.
A pattern is emerging because companies growing at 50%, 60% CAGR, at least in the last 2 years. Inventories are shooting hard. And then secondly, because of that, your operating cash flow is turning negative. And then plus you'll have to do Capex, cash flow from investing activities, that will also negative.
Right.
Then financing you'll have to take from debt or equity dilution. Completely makes sense. But now onwards, any plan to dilute equity further?
So as things stand, we have no plans to dilute equity any further unless there is actually an opportunity on the inorganic side that actually comes up. If we are in sync with the investors that we have already partnered with, for an inorganic opportunity, we may consider, but nothing is on table as we speak.
Acquisition.
Yeah.
Okay. You have a JV, right? And what does the other 50% bring to the table to this JV, the Pectin plant, beyond mango?
So 49% is actually held by the technology partner.
Okay.
The technology partner is someone called as D Technologies as such, and
India based?
India based.
Okay.
Yeah. So the promoter of D Technologies actually has the experience of selling their previous venture to a food company based in France as such. So she has a lot of experience in food technology sector, and she has also been invested into her own company by another investor called as the Carnelian investors as such. So she has rich pedigree, and we have partnered with someone who is very good in this space, whom we have been observing and have idolized over a period of some time as such. So they're good partners to be with.
Excellent. So takeaway on the financials: no more equity dilution. You don't foresee anything as of now.
Right.
Working capital now, even if you were to further grow sales, would you further require debt and equity? No, or
We
yes,
wouldn't require any
sufficient?
further debt
Okay.
about this particular point of time, what is
Okay.
there at this point of time.
Okay.
But then, as I told you, if we see supernormal growth at any point of time, is then we would actually need debt. But having said that, the current levels of debt is something that you would look at as the peak level of debt that you would actually see in the company, given that we are actually holding a lot of inventory as we speak, and basically the previous year being a high priced raw material pricing year as such. So it's generally in the nature of a pass on that we actually have in the form of inventory that we actually hold. It's a cost plus model that we actually follow, because of which the inventory buildup over the last couple of years have been quite substantial, that you actually see, and which has actually been affecting our cash flow as such, which will turn for the positive once the raw material prices come down.
Okay. When we spoke prior to this, you had mentioned that you cannot give a EBITDA margin figure, and that's the first time I'm hearing in any business. Even if you're doing a cost plus basis,
Right.
okay, like it might waver by 2 or 3% to the upside or the downside, but there is no margin that you're targeting any of such.
Perfect. So what actually happens is that when there is a raw material price, which is actually a pass on to the end consumer that you're actually talking about, or to the brand that we are selling to, say if the raw material price is 100, then the price that we pass on to the end consumer is basically 100 plus say 8 or 9 or whatever is the agreed price between that customer and us as such. When the same customer actually comes in the next year, the raw material price is say 50 or 70. So what we actually have is 50 plus the 7, 8 or 9 or 10, whatever we actually agree. So the percentage there is actually not defined as such. It's the gross margin per kg, and the endeavor in the business is to actually say as to how do we actually improve the gross margin per kg on a product wise basis, on a year on year basis. Also, what actually comes as an advantage or a disadvantage is basically if you have great sourcing powers, or if you have favorism from your vendors, then you might be able to buy it at a lower price than what the industry does. So if you are an efficient player, those are the efficiencies that actually kick into the business once you start sourcing more efficiently as such.
Got it. Okay, great. Thank you very much.
Right.
And all the best.